Hello my good students, welcome back to our session. I'm your instructor CPA Aringo Frederick. So in our class today is a continuation of what we started earlier on. If you are joining us today, remember in our previous class we had tackled IBD. We are still under capital allowance. So in our class today I want us to talk about wear and tear allowance. Of course we'll be looking at the new rates and the previous rates. Basically, if you are tested in anything regarding the last financial year, we'll be using the new rates which were amended. And if you are given any data probably relating to 2019 backwards, that is when you'll be using what? The previous rates. So in our class today, my good students, I want us to talk about wear and tear allowance. I want us to talk about wear and tear allowance, WTA. I want us to talk about WTA. Wear and tear allowance. Also a very important concept that you must always have at the back of your mind anytime I'm dealing with capital allowance. Anytime you are dealing with capital allowance, you must always recall the aspect of WTA. So we are talking of wear and tear allowances. Wear and tear allowances. Wear and tear allowances, commonly known as what? WTA. Commonly known as WTA. Wear and tear allowance. So a person will ask, what is WTA? What is WTA? What is wear and tear allowance? What is wear and tear allowance? So in simple terms, you normally say that this is a capital deduction granted to an investor. This is a capital deduction granted to an investor who incurs capital expenditure on machines and other assets used to generate business income. We are saying that this is a capital deduction granted to an investor who incurs capital expenditure on machines and other assets used to generate business income. So this is what you're saying. Plant and machinery, of course, includes the following. These other assets, ideally the one that we'll be talking about will include talk of furnitures, my good students. Talk of maybe office equipment. Talk of vehicles. Talk of aircrafts. All these are under the category of what? Under category of WTA. So at any given point, you never be having deduction granted to investors, of course, on investment on capital expenditure in relation to aspect of machines and other assets, ideally which are not on either IBD or ID. They'll be classified under WTA. They'll be classified under WTA. So we normally say that assets under this category are always divided into classes or pools. Assets under this category are always divided into classes or pools, Of course, each with its capital allowance. So in that case, we can also add and say, by the way, for you to grasp it correctly, we normally say that assets under WTA are categorized into the following classes or pools. So we normally talk of these classes or pools. So in this case, we'll be having the aspect of the rates, considering the new rates, and talk of the previous rates. So the new rates, ideally, this is from 2020. The new rates are from 2020. The previous rates are 2019 going backwards. So we start with class 1. Talk of class 2. Talk of class 3. Talk of class 4. And talk of special class. Talk of a special class. So from 2020, and of course if you'll be doing exams in 2021, you'll be tested in relation to what? In relation to the last financial year. and the last financial year is 2020. Definitely, you'll be using the new rates. You'll be using the new rates if you're given data for 2020. So from 2020, class 1 item, we normally talk of 25%, class 2, 25%, class 3, 25%, whereas whenever we'll be talking of class 4, we'll be talking of 10%, and special class, 10%. Ideally, special class, we're looking at softwares and other telecommunication devices. Then, talk of 2019 going backwards. Initially, we were dealing with 37.5%. This was 30%. This was 25%. This one was 12.5%. Whereas the special class, we are dealing it at the rate of 20%. So ideally, this is a difference. This is a main 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 difference. In 2019, going backwards, capital allowance in relation to WTA class 1, we had 37.5%. The new rate currently, and of course the one that you're going to use when you'll be doing your exams, if you're doing exams in 2021 going forward, unless they change it again, you'll find that you'll be using what? 25%. Initially, it was 7.5 for class 1. Class 2, I'll be talking of 25% current. Initially, it was what? It was the aspect of 30%. Class 3, it was 25%, which it has remained the same. Class 4, we had 12.5%. Now, it's 10%. 2019, special class, we had it at the rate of 20%. Now, it's at the rate of 10%. It is at the rate of 10%. So I want you guys to be very, very keen whenever it comes to taxation. And what I can advise is this. If you're using last semester's notes and it is tax, kindly I'm requesting you guys to dispose of those notes. Because you'll find that there are a lot that has changed when it comes to these rates. Employment income has changed. Some of the rates. Talk of, whenever we'll be talking of some of the withholding tax have changed. Come to capital allowance has changed. When we're looking at double taxation, things have changed. When we're talking of the allowances granted, say like home ownership savings plan, all these have changed. So I really advise that even if you don't have resources to join classes, you can always talk with your colleagues to give you the updated notes. Those who are attending classes, those who are attending probably Mdarasa classes and other classes elsewhere, you can always approach them to give you the notes. And this ideally will apply for students who are doing tax. If you're doing tax, if you're a student of ATD, if you're a student of CPA Section 2 or CIFA, or if you're a student doing CPA Section 6, kindly, what I'm requesting you guys is that try to update yourself with the new notes. Specifically, I'm talking about tax. Specifically, I'm talking about tax. For you to be in a good position, try to update your notes. So, looking at this case, my good student, let us analyze class 1 items. Whenever we're talking of class 1 items, what will it include? Or what are the characteristics of class 1? And we're looking at it at the rate of 25%, the current rate. 25% being our current rate. So class 1 is very ideal for us to understand the characteristics of this class. It should be very ideal for us to understand the characteristics of class 1 item. So whenever we're talking of characteristics of class 1 item, whenever we're talking of this characteristic is, first of all, number 1, it should be heavy earth moving, heavy earth moving, heavy earth moving, machineries or equipments, heavy earth moving, machineries or equipments, machineries or equipments. Dash 2, they should be more than 2 tons, more than 2 tons, more than 2 tons, more than 2 tons. These are the main characteristics of class 1 item. These are the main characteristics of class 1 item. Heavy earth moving, machineries and equipments, and also more than 2 tons. So examples of these items will include the following. Examples of this item, my good students, will include the following. Examples of this will include talk of tractors, Number 1, talk of tractors. Number 2, my good students, you can talk of what? You can talk of combine harvesters. Combine harvesters. Number 3, my good students, you can talk of what? You can also talk of excavators. Number 4, we have so many. So we're not going to mention all of them, but we have so many. We can also talk of maybe graders. Talk of forklifts. etc, 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 etc. The main element that you should always grasp here is that I'll be looking at the characteristics of this item. I'll be looking at the characteristics of this item. Now, after we've talked of this, let us go back and, or rather, let us continue and look at class what? Class 2. Class 2 items. We know very well that right now they are at the rate of 25%. Also, it's very ideal for us to understand the characteristics of these items. So, characteristics of class 2 items will include the following. Office electronic equipment. Office electronic equipments. Office electronic equipments. And the key word here is electronic equipments. The key word here, my good students, we are talking of what? Electronic equipments. Electronic equipments. Electronic equipments. So, in this case, examples of this item will include what? Examples of this item, my good students, will include the following. Of course, we'll be talking of computers. We'll be talking of, say, computers. We'll be talking of, say, cash registers. We'll be talking of, say, maybe I'm having photocopiers. We'll be talking of maybe ETR machines. We can talk of scanners, etc, etc, etc. So long as you've identified that this is an office electronic equipment, kindly have it in class, have it in class 2. Have it in class 2. Have it in class 2. Now, after we've talked of that, my good students, that should take us to class number what? Class number 3. That should take us to class 3. That should take us to class number what? Class number 3. Also, let us try to understand the characteristics of items under this class. Characteristics of items under class 3. Characteristics of items under class 3. So, for class 3 items, my good students will be talking of the following. We will be talking of light earth moving machineries and equipments. So allow me to have it there. So we'll be talking of light. These are the characteristics. Talk of characteristics of this class. Characteristics of this class. We'll be talking of light earth moving. Very key. Light earth moving machineries and equipments. Light earth moving machineries and equipments. Machineries. Light earth moving machineries and equipments. We'll also be talking of self-propelling, 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 self-propelling. My good students can also talk of what? Less than 2 tons. Less than 2 tons. Less than 2 tons. Less than 2 tons. So these are the characteristics of class 3 items that you must always be having at the back of your mind anytime you are looking at what? Anytime you are looking at class 3 items. Now, after we are good on that, now we can look at examples of these classes. Examples of assets under this class. What are these examples? What are the examples of items under this class? Of course, we'll be looking at the following. We'll be looking at the following. Some of the items that you're very, very familiar with. Some of the items that you're very, very familiar with. Such as what? We'll be talking of motor vehicles. Motor vehicles. And whenever we're talking of motor vehicles, we'll be looking at so many. Talk of what? Saloon cars, e.g. saloon cars. talk of delivery vans. Talk of delivery vans, my good students. Talk of what? Talk of Nissans. Talk of lorries. And these lorries, you're looking at lorries below 2 tons. Lorries below 2 tons. Talk of what, my good students? You can talk of so many cars here. You can talk of so many cars here. You can talk of so many cars there. That is motor vehicles, right? E.g., we've talked of that. Number 2, we can talk of aircrafts. We can talk of aircrafts. We can talk of motorcycles. You can talk of motorcycles. You can talk of motorcycles. You can talk of motorcycles. Okay. You can also talk of what? Tuk-tuk, etc., etc. Tuk-tuk, etc., etc. So ideally, these are what, my good students? These are examples of assets under class 3. These are examples of assets under class 3, under class 3. Very important that we should always understand that. And probably also looking at it practically, because remember, from day one, we say that tax is very practical. We say that tax is very, very practical. So, with this new technology, I know we have drones right now. Drones, some companies have taken that as assets. My question will be, if you are given a drone, for example, in the exams, you've seen you have a drone, or you are preparing your draft accounts, and you realize that that company has drones. Where are you going to place drones? Which category of WTA are you going to place these drones? Or take also another example like routers, Wi-Fi routers. Nowadays is very common in every office to have Wi-Fi. And of course you have these routers that you normally use. So the question is, if you're given a router, my good student, where are you going to place that? Where are you going to place that? So these are some of the questions that we must always ask ourselves, even as we are pursuing this course. We should always be always try to open our mind wide and relate with whatever that is happening around us. Now, because we are good in this, some of the assets under class 3, this is a very important concept that I also want us to handle under class 3. This is a very, very important concept that I also want us to handle under class 3. And again here, there is also a change when it comes to whatever that you had previously and whatever that you're using now. So you'll find that tax has really changed. There are a lot of amendments that at least for you to pass these exams for tax, you must be thorough, you must be always updated. Yes, some will argue that some race will be given, the race to use. But what about those that will not be given? How will you go about that? So it's very ideal for us to always be updated, right? For us to always be updated. So under this class 3, I want us to have an item known as NB. Note. I want us to have NB. Under this class 3, I want us to have NB. I want us to have NB. Very important concept. I want us to have NB. I want us to have NB. So we have our NB here. So we have our NB. We have our NB. And looking at NB, I want us to talk of these two main elements. We'll be talking of commercial vehicles, and non-commercial vehicles, and non-commercial vehicles, commercial vehicles and non-commercial vehicles. I want us to talk of these two, commercial vehicles and non-commercial vehicles. A very important concept that again you'll find that it will be affecting us. It will be affecting us a lot. It will be affecting us. It will be affecting us a lot. It will be affecting us a lot. Commercial vehicle and non-commercial vehicle and non-commercial vehicle. So we start with commercial vehicles. We start with commercial vehicles. Let us understand each and every concept behind commercial vehicles. So, looking at commercial vehicles, my good students, we just be looking at vehicles that are used to generate income directly in the business. Vehicles that are normally used to generate income directly in the business. Examples, we normally talk of taxis, talk of these other public service vehicles. We normally talk of maybe lorries. We normally talk of delivery vans. You'll find that ideally we'll be using these to generate income directly in our businesses. What about non-commercial vehicle? And this is where I want our point of concern is non-commercial vehicles. Non-commercial vehicles. What about non-commercial vehicles? Whenever we'll be looking at non-commercial vehicles, I want you to grasp this and grasp it very, very correctly. Whenever we'll be looking at non-commercial vehicles, these are the vehicles that do support operations within our business, but they are not directly used to generate income. Say for example, you have a CEO vehicle or car, you have the CFO vehicle or car. So you'll find that ideally, as much as I'm using it in business, I'll also be using it for my own private purposes, right? And when I'm using it in business, ideally maybe it's going for meetings. You'll find that it is supporting operations, but they are not used directly to generate income. And our point of concern here is, how do we treat acquisition of non-commercial vehicle? How do we treat acquisition of non-commercial vehicle? How will you treat acquisition of non-commercial vehicle? How will you treat acquisition of non-commercial vehicle? How will you treat acquisition of non-commercial vehicle? So you'll find that on acquisition of non-commercial vehicle, my good students, on acquisition of non-commercial vehicle, we normally restrict this amount to, so we normally say that the purchase cost is restricted to 3 million shillings. On purchase of non-commercial vehicle, the purchase cost is restricted to 3 million shillings for purposes of wear and tear allowance, for purposes of wear and tear allowance or capital allowance. So we are saying that at any given point, whenever I be talking of non-commercial vehicle, you'll find that I'm going to restrict this purchase cost to how much? To 3 million. I'm going to restrict this purchase cost to how much? To 3 million. Compared to what was happening earlier on. Initially, the restricted value for non-commercial vehicle, we are restricting that to what? To 2 million. But currently, we are dealing with 3 million. Also, that is another change that you must always have at the back of your mind always. Another change that you must always have at the back of your mind always. Now, after we've talked of that, you'll find that for you to understand it better, assuming that I'd purchased a saloon car, I'd purchased this non-commercial vehicle, say at 5 million. And I want to provide the WTA on this asset. I'm not going to provide with the cost of 5 million, but I'm going to restrict it to how much? 3 million. So that in the event that I'm providing capital allowance, I'll be providing it at what? At the cost of 3 million and not 5 million. And this is how we are talking, or that's how we're talking of what? The restricted value. That's how we are talking of the restricted value. So this is for what? On acquisition of non-commercial vehicle. What about on disposals, my good students? What about on disposals of non-commercial vehicle? So talk of on disposal of non-commercial vehicle. Disposal of non-commercial vehicle. Disposal of non-commercial vehicle. Disposal of non-commercial vehicle. On disposal of non-commercial vehicle, this is what you must always have in mind. This is what you must always have in mind. I'm going to determine our disposal value. Of course, I'm going to show you where we are going to use this. So we are going to determine our disposal value. And the good question that we must always ask ourselves is, how will we determine this disposal value? To determine the disposal value, we normally talk of the sales proceeds. Okay? We divide by the original cost. We multiply by the restricted value. We multiply by the restricted value. So that assuming in this event maybe I had purchased this vehicle at 5 million, right? And I'm disposing it, say, at 3.5 million. So I'll be having 3.5 million disposal value. Original cost was 5 million times the restricted value, which is 3 million. So the figure that I'll be having there is what I'm going to take it as what? As disposal value. When we'll be preparing our WTA schedule, you'll clearly see where this amount will fall, where we will treat the disposal value, where we'll treat the disposal value. So this is very important. This is very important that we have it in mind. This is very important that we have it in mind. Now, this is a main concern that you must always have whenever I'm dealing with class 3 items. Whenever we are dealing with class 3 items, we must always have that in mind. You must always have that in mind. You must always have that in mind. Now, after we've talked of class 3, I want us now to look at class number 4. Class number 4, I normally term it as what? As a dustbin class. Class number 4. This is a dustbin class. I'm going to tell you why we are terming that as dustbin class. Of course, this is 10%. Remember, we are looking at the current rates. Remember, we are looking at the current rates. So talk of dustbin class. Dustbin class. The question will be, why are we terming this as dustbin class? You'll find that any asset that will not fall under either class 1, class 2 or class 3, they'll definitely be taken to class 4. That's why we are terming it as a dustbin class, because any asset which is not in class 1, which is not in class 2, which does not have characteristics of class 3, I'm going to place it under what? Under class 4. And the reason why I normally term it as what? As a dustbin class. So examples of these assets we have the following. Examples of these assets we have the following. Ideally, here we will not be having characteristics because, as I've said, any asset that will not fall under either class 1, class 2 or class 3, definitely you're going to take it under class 4. So examples of such assets will include the following. Talk of trailer. Trailer without, this is a trailer, of course without truck. And trailer, ideally, someone will ask, what is this trailer? Assuming you bought a tractor, right? You bought a tractor here. You bought a tractor here. So in this tractor, of course, there is that aspect that you normally attach in behind. This is what you're terming it as a trailer. This is what you're terming it as a trailer. So we are saying that if you're given only this alone, you're going to take this under class what? Under class 4. If you're given this alone, you're going to take it under class 4. This is what you're terming it as a trailer, okay? This is what you're terming it as a trailer. So, having that case, we'll also be talking of what? We'll also be talking of furnitures. We'll also be talking of what? Partitions. Office partitions, of course. We'll be talking of curtains. We'll be talking of so many things like carpets. We'll be talking of CCTV cameras. We'll be talking of telephones, my good students. We'll be talking of TV sets, my good students. And so many other assets that we'll be having under class 4. And the beauty part of it is that if you go on MDarasa app, just below this video, for those of course who are watching us via the app, just below the video, you'll find that we have the notes which are clearly provided there, and we have all the lists of class 4 items. We have all the lists of class 4 items. So the list is very long. We just mentioned a few. So if you have a MDarasa app, and of course if you're viewing this video via the app, just below this video you'll find that we have the notes. So you can go through the notes. We have a lot of examples in relation to that. Now that should take us to, of course, our last class before we look at schedule, WTA. This is special class. This is special class. At the end of the special class, we normally talk of the following: computer softwares. We normally talk of computer softwares and other telecommunication devices, So basically you're saying that at this point, for special class, ideally you've talked of it at the rate of what? 10% the current rate, because previously it was at the rate of 20%. So this is a summary of everything that we will be required to know whenever we are dealing with what, whenever we are dealing with capital allowance. So in our next class, my good students, we are going to prepare our WTA schedule. And the moment you have our wear and tear allowance schedule, you find that things will be very, very simple, because you can now handle any question for capital allowance. Because we've looked at IB, we've looked at IBD, and also we've looked at WTA. So right now, suppose you have any question for capital allowance, it should be very, very easy for you. And the beauty part of it is that we've looked at this concept with the new rates, with the current rates that you're going to use in our exams for 2021. So thank you so much for joining me. I want you guys to join me in the next session, where we'll be looking at wear and tear allowance schedule, as well as we'll be handling questions. So for you to get in touch with us, of course, you can always contact us on 0708 068 851. You can always reach us on that number. For those who have not downloaded the app, probably you're viewing us via YouTube, the same case, just go to Play Store, because I know that those who are viewing us via the app right now. For those who have not downloaded our app, go to Play Store, search Mdarasa. Is the only Mdarasa app on Play Store. Download the app and let us start enjoying studying. More so for those students who are doing CPA. I know you like it. For those who are doing HD and CPA, and also CFA Section 1M and 2. Thank you so much, guys, and let us meet in the next session.